Hello and welcome to Trading Mastermind, where we help you become a better trader through accurate technical analysis. In this video, I will be showing you a price action strategy that, when implemented properly, can give you some seriously good results. But before I get started, it is important for me to let you know that trading any market carries a significant level of risk, and you should only invest money that you can afford to lose. Please like this video if you find it valuable. Comment any questions, suggestions, love or hate, all is welcome here. And please subscribe for trading content that will help you become a better trader. The strategy I'm going to be showing you today is a price action strategy. We are not using any indicators in this particular strategy. We are simply using a naked chart analysis. No indicators whatsoever. For the purpose of this example, we are going to be looking at Euro USD as our currency pair. However, it does work with any currency pair. We are using the daily chart for this strategy, and this is a daily candlestick strategy. You cannot use any other time frame for this particular strategy. So when trading this, be sure that the candlestick chart you are using is set to the daily chart. Do not have it on the hourly chart. Do not have it on the 4-hour chart. We are specifically looking at the daily chart. In this example, I'm going to be looking at all the possible setups we could have taken so far for the year 2021, and I've marked them off already just so we can speed up the video. The blue markings are trades we would have taken that would have ended in a profit, and the red markings are the trades we would have taken that will have ended in a loss. I will go into greater detail as we're going over each particular trade, but for now I'm going to give a brief overview of exactly what we're looking for. So as I have already said, this is a daily candlestick, naked price chart, price action strategy. It is very simple to follow, and it yields extremely high results. So let's get to what we're actually looking for here. I'll give a brief overview and then go into detail. So as a brief overview, what we are looking for in particular are daily engulfing candlesticks. That will be our first confirmation that we are looking for a trade. We are then looking for, on the following daily candlestick, we're looking for a retracement 50% of the candlestick that was engulfing to place our entry in the direction of the engulfing candle. Let's go into detail. So for this first trade in particular, we have our first engulfing candlestick setup. We are not looking at trends, we are not looking at anything other than the current daily candlestick in relation to the previous day. So for the year 2021, our first setup would have come here. Just to give an example, here we have our first engulfing candle setup. However, on the next day, we did not have a 50% retracement, meaning no trade. Just in case you were wondering why I've skipped this one. So our first trade will come here, and this is exactly what we are looking for. We are looking for an engulfing candlestick signal, which we have. An engulfing candlestick signal basically means if we have a red candlestick or a bearish candle, here when we have our bullish, it completely engulfs the bearish candlestick, showing that we may have a momentum shift to the upside. So this is an engulfing, a bullish engulfing candlestick setup, meaning we are now looking for buys. The next confirmation we are looking for is to enter. We only enter a trade in a buy position if we have a 50% retracement of the body of this candle, which we clearly have, and we are only looking at that for the next day. So if this candle didn't have a 50% retracement, but this one did, that doesn't matter. We want the 50% retracement to happen on the very next candle, which we have in this case. To place our stop loss and our take profit, we will place those above and below the candlestick low and high. Let me just take this away so we can see it easier. So for the entry, we are entering at a 50% retracement of the candlestick body, which will be right over here. Our take profit will be above the high of this candle, which will be here. And our stop loss will be below the low of this candle, which will be here. So as you can see, we had our engulfing, our bullish engulfing setup. Then the following day, price did retrace to more than 50%, but once it hits 50%, that is where we are entering our trade. So we would have taken a buy position right over here. Our stop loss will go below this candle's low, and our take profit will go above this candle's high. So as you can see, we would have entered around here. We would have had a stop loss of around 30 pips, and we would have had a take profit of around 50 pips. As you can see, our stop loss will not have been hit, and our take profit would have been hit. So this, for the first trade of the year, would have been a profit. Now we look for our next setup, which will be an engulfing candlestick setup, which we have had over here. We have had an engulfing candlestick setup here, but as you can see, the next day, when we are looking to enter on a 50% retracement, we have not had a 50% retracement, so we do not trade. Here is where we have another engulfing, a bearish engulfing setup, and the following day, price has clearly moved and retraced to 50% of this candlestick. Now it's important to note that when you're trading this live, you may mark off that you have had your engulfing setup on the daily chart. But when you're waiting for your trade, you can move down to the lower time frame if you please. But bear in mind to only enter a trade on the following daily candle. If this candle has passed, you do not look to trade. Alright, so here we did have at some points in the day a 50% retracement. Our stop loss would have gone above the high of this candle, which you can clearly see did not get hit, and our take profit would have gone below the low of this candle, which you can clearly see did get hit. So this would have been about a 35 pip stop loss for around a 40 pip take profit, which we would have hit a take profit. Our next setup came right over here, where we clearly had a bearish engulfing candle, and the following day we did have a 50% retracement of that candle, as you can see by the wick. We would have entered somewhere here, stop loss would have gone above there, which you can see does not get hit, and our take profit would have gone below this wick, which you can clearly see would have been hit. So in this particular trade, we would have entered somewhere here. Our stop loss would have been around 40 pips, and our take profit, which would have been hit, would have been about 80 pips. So our first 3 trades in for the year are all profits. The next trade that we would have been able to take, bearing in mind there are engulfing candles over here, however we did not have 50% retracements, meaning no trades. And here we have our next trade, which would have been a loss. So as you can see, we have a bullish engulfing, meaning we will trade at a 50% retracement of this bullish engulfing candle the following day. As you can see, that will have happened at some point in the day. We would have entered here. Our stop loss would have been above this high, our stop loss would have been below this low, and our take profit will have been above this high. And as you can see, this would have resulted in a loss. And I must note that with any price action strategy, or any strategy for that matter, there will always be losses. And in this particular case, we would have had a take profit of around 30 pips, a stop loss of around 80 pips, which would have hit our stop loss. Let's move on to the next trade. Our next trade would have been on this bullish engulfing. You can clearly see we have the bullish engulfing, a 50% retracement on the following day, which we would have traded at 50% retracement of this bullish candle. And as you can clearly see, our take profit would have been around 50 pips, which would not have been hit, and our stop loss would have been around 60 pips, which would have been hit. So once again, we have had a loss, and that is the last loss of the year to date. Our next setup on this bullish engulfing, I'm going to go over these a little bit quicker now because I'm pretty sure you get the point. So on this next setup, we have this bullish engulfing. We trade the following day when it hits the 50% retracement, stops below here, take profits above here, and as you can see, price did not go below, so our stop would have been good and our take profit would have been hit. The next setup that we would have taken would have been this trade over here, and as you can see, we have a bearish engulfing, meaning we would have sold this at a 50% retracement on this day. We would have taken our trade around here. We would have had a stop loss of around 50 pips and a take profit of around 40 pips, which would have been hit on this day. Our next setup is this one over here. And as you can see, we have a bullish engulfing, which we would have traded on this day at the 50% retracement level of this candle. And as you can see, right here we would have traded stop loss of around 40 pips, take profit of around 40 pips as well, and we would have hit our take profits. And for our final trade of the year thus far, we have another bullish engulfing setup where, as you can see on the following day, we will have had a 50% retracement of that. So we would have traded on this day at around the 50% retracement level, stop loss of around 25 or so pips, take profit of around 35 pips, which we would have hit a take profit. So that's the strategy. It is very simple, very easy. Anybody can do it on any currency pair. Just make sure you are using the daily chart. I hope you found this video valuable. If you did, please hit that like button and subscribe to the channel for any technical analysis education.